Welcome, welcome, welcome. We're just going to wait 1 second while everybody gets into place, both in real life and on screen behind the scenes here. Just wait 1 second. We'll start in about 10 seconds. Make sure everybody's good. Okay, thank you all for being here and welcome to Choosing the Right Cannabis Banking Partner webinar. The Cultivated team is proud to host with our partners at Shield Compliance. My name is Jay Rosenthal and I'm the co-founder and managing director of Cultivated Media. And for the purposes of this webinar, I'll be your host and back-end technician and producer. When we started working with the Shield Compliance team, we knew that we wanted to host a webinar focused on one of the more challenging parts of operating in the cannabis industry, and that, of course, is banking. And Shield Compliance was all in, which was, of course, amazing. Because with the ever-changing regulatory and compliance landscape, having an up-to-the-minute look at the banking landscape and how cannabis businesses can access banking options, not just around deposits, but also other banking services, is really important. So we're excited about what we have in store for you today, and here's what's coming up. In a moment, I have Tony Repanich, the CEO and president of Shield Compliance, on deck to give you a bit of an overview of the cannabis banking landscape today and considerations when choosing the right financial institution. Then we'll jump into an incredible panel conversation which Tony will moderate that will include cannabis banking leaders with literally hundreds of years of experience under their belts. Wait till you hear their bios. Before we get into that, it's my pleasure to bring up Tony Repanich, the president and CEO of Shield Compliance. And as president and CEO of Shield Compliance, Tony leads day-to-day operations and is the company's principal product architect. Having previously served as a senior executive at a Washington state-based community bank for 25 years, Tony has in-depth knowledge of the banking industry, of course, and the regulatory and compliance requirements for high-risk industries. Today, he brings that knowledge to financial institutions serving and considering serving the legal cannabis industry, which is why we are so lucky to have him here today and call Shield Compliance a partner of ours. So Tony, over to you.
Jay, thank you so much, and hello everyone. Thank you for joining us today for the Shield Compliance and Cultivated Media webinar. My name is Tony Repanich, and I'm the president and CEO of Shield Compliance. It's a pleasure to be here with all of you. You know, today's U.S. cannabis industry is a $35 billion retail sales industry and is expected to grow to over $70 billion by the end of the decade. As new states legalize cannabis and consumer adoption expands and normalization of the industry marches forward. However, the industry is also facing increased competition, lower margins, consolidation, and in some cases, outright business failures. Additionally, licensed operators and their bankers face the continued burden of 280E of the IRS tax code and the devastating impact it has on cash flow. While rescheduling may resolve that issue, that can continue to get kicked down the road. Business failures in California, for example, are particularly severe, with the legal market having only a fraction of the operators compared to previous years. The cannabis industry is currently in the early stages of the scale section of the consolidation curve, indicating a high rate of mergers and acquisitions in the coming years. However, there has been a 68% decrease in capital contributions to the cannabis industry. The largest MSOs are still relatively small compared to other U.S. consumer-facing industries, and there's a drive for scale and differentiation within the industry. However, the industry and the bankers that serve it are caught up in the risks of a large illicit market and the differences that continue to persist between state and federal laws. While access to banking continues to improve, consider this: there are nearly 10,000 banks and credit unions in the country, but only about 240 actively serve the cannabis industry today. Today's bankers are bound by the same FinCEN guidance that was issued over a decade ago. That guidance, although not as clear and concise as typical requirements set out by financial institution regulators, sets high expectations for bankers serving the industry, both in terms of account monitoring and ongoing government reporting. And failure to comply adequately with those regulations can be devastating for a financial institution. So bankers who serve this market are looking to grow their base of core deposits, generate additional fee income, and where it makes sense, increase earning assets, make loans. These bankers are motivated by the business opportunity presented by the cannabis industry. But as you're here firsthand today, they are also passionate about making sure these state legal businesses have access to quality financial services. In today's discussion, we will explore the evolving cannabis banking market, the growth in banking options, and the variety of services now available beyond basic deposit accounts. We will also discuss what businesses should consider when choosing a financial institution, the key factors such as fees, service offerings, compliance expertise, and industry knowledge, and when it might be time to switch banking partners. Additionally, we will delve into what bankers look for in cannabis related business clients, understanding the financial institution's perspective on risk, compliance, and relationship building, and how businesses can position themselves as strong banking clients. In conclusion, the cannabis industry presents both significant opportunities and challenges for financial institutions. As a former community banker myself, I wholeheartedly believe that every business needs a good banker, especially when changes and challenges in an industry require strong advice and access to necessary financial services to successfully navigate these market dynamics. I look forward to our discussion and hope you find it insightful and valuable. Thank you for being here with us today, and I will pass it back to Jay to introduce our panelists.
Thank you, Tony, but don't go anywhere because you're coming right back. And I will note, because we want to respect everyone's time on this webinar, we won't be taking questions, although feel free to comment in the chat, whether you're tuning in on LinkedIn or on YouTube. I'll be putting contact information for our panelists and guests today, so be on the lookout for that in the chat and in the show notes. And now I'd like to introduce the good folks you'll be hearing from in a moment in a panel moderated by Tony. First, Paul Evangelista. He is an EVP of Specialized Banking at Needham Bank near my hometown of Natick, Massachusetts. Paul has over 30 years in banking, and important to this webinar, he designed and developed and launched the first cannabis and high-risk business group in New England in 2012 and grew the portfolio substantially. He worked directly with the state, the FDIC, and FinCEN to develop a thoroughly compliant program. Joining him will be Herman White, Vice President and Division Manager of Cannabis and Commercial Banking at KeyPoint Credit Union in California. Herman has over 25 years of experience in the banking industry, especially around cannabis, specialty banking, technology banking, and private equity, serving emerging growth companies with debt and equity solutions. Herman oversees the cannabis banking business development, sales, and operations. Additionally, he's responsible for the credit management process for all commercial loans, small business administration loans, and business account activities and services at KeyPoint. He is also a certified cannabis banking professional and an advocate for cannabis for medical and recreational use. So welcome, Herman. And joining Paul and Herman and Tony, we will welcome up Ross Sloan, the SVP of Specialty Banking and Specialty Banking Officer at Dart Bank. They're based in Michigan, but I think Ross is based elsewhere, which he may mention. He is the VP Specialty Banking Officer and has a 38-year banking career, has included roles in retail banking, business banking, commercial banking, and middle market banking. In his current role, he works with others at Dart to serve cannabis and hemp-related businesses throughout the U.S. In addition to his day job, he volunteers as a member of the Hemp Committee for the National Cannabis Industry Association. So with those introductions, Tony, Ross, Herman, and Paul, over to you.
Paul, Herman, and Ross, thank you so much for joining us today. We really appreciate your time. I know Jay gave a quick introduction of each of you and your financial institution, but it would be helpful to hear from each of you maybe the evolution of cannabis banking for you as a banker and for your financial institution over the last few years, and I guess for you, Paul, over a decade now of serving the cannabis industry. So I'll start with you. Just share with us your sort of evolution in this space.
Sure. Thank you, Tony, and I'm glad to be here, and hopefully we'll be able to share some insights. We did start the business about 11 years ago at the former institution, Century Bank, and at the time, it was strictly deposit taking. And it was a nascent industry here in Massachusetts, really in the country. And, it, regulatory bodies were still trying to form guardrails for banks. No one was entirely clear as to how far we could go. And so we were part of that initial foundational group that helped build um, those guardrails, both at the state level and working with our regulatory agency that audited Century Bank. To that end, we had initially taken in the first 15 applicants in Massachusetts. We were the only institution that banked cannabis, so they didn't really have an option but to deal with us. And together we, got them set up. We had created a process, and we actually, after recommendations from one of our regulators, ended up building a separate money room so that we weren't commingling cannabis monies with traditional high cash intensive businesses, restaurants, gas stations, etc., because the Federal Reserve in Boston at the time did not want cannabis derived cash. So whatever we counted, we stored and then recycled through the 75, 80 cash dispensers slash ATMs we had in our um, network, as well as providing cash to our branches that would then recycle the monies out. We also used another high risk business line we had, which were the check cashers, to absorb this cash. They needed cash, and cannabis provided it for us. So we were able to balance that growth. Initially, it was truly just checking accounts, although we early on started providing treasury services to the groups, trying to get them off of check writing. We offered ACH with small limits. We offered them the wire modules, and worked with the regulators and let them know that we were doing this. And one regulator said, "Well, you're using the federal network," and I'm like, "Well, where do checks clear?" And so again, we were allowed to continue to push that envelope. And today at Needham, fast forward 11 years, we offer the full range of treasury services to the clients, and full cash processing services, as well as other services that we do for them.
It's so funny, Paul. You explain your early days of your cash room and your check cashers and your ATMs. Almost sounds like money laundering, but a creative way to get around those early challenges, and so good to hear that you've been able to move to now almost normalized banking in terms of the services that you extend to these customers. Obviously, the compliance requirements remain high.
Very high. And, back in the day, it was good that we had a small number of clients, and that grew um, at a pace that was manageable, because back in the day, much of the compliance was manual intervention using reports that were generated from mainframes and from teller systems, etc. Today, thankfully, with Shield and with our other infrastructure here, much of it's automated, although it still requires manual intervention from a review as items fall out of thresholds. And so, yeah, we've come a long way in 11 years. We're almost normal until
Yes.
we're
Well,
not.
well, let's work our way across the country. And Ross, Dart Bank, based in Michigan, but I know that's not where you started your experience with this industry. So give us a little bit of background on yourself as a banker, and then the evolution of cannabis banking at Dart Bank in Michigan.
Absolutely. Thank you, Tony. I've been in banking for 39 years, everything from retail to commercial to middle market banking, but started banking cannabis, and more specifically hemp, in 2019 after the 2018 Farm Bill. As you mentioned, I do not live in Michigan. I live in Asheville, North Carolina. And since North Carolina does not have either a medical or recreational cannabis program, I first cut my teeth in the industry with hemp, but knew that I would eventually start to bank cannabis companies as well. Started doing that about a year later, and then joined Dart Bank 2 years ago, right at 2 years ago. Dart Bank was the first bank in Michigan to bank cannabis, but we realized pretty early on that we needed to expand it to a national program. Part of that was to have economy of scale, but also just not to have the concentration risk all in one state, given how rapidly and how much things can change legislatively around cannabis. So we now have a national program. The product offerings are similar to what Paul mentioned earlier. Started with deposit accounts, related treasury services, but we've continued to grow the specific product offerings within that, particularly as technology advances. So we are always open to new ways that we can serve our customers in the industry, and I think there will be new products that will evolve as the industry evolves, and we certainly want to be forward thinking and play a role in that.
Thank you, Ross. Well, Herman, you're representing, holding up the west coast of the country here for us. Give us a little color on your experience in the cannabis banking industry and specifically how that's evolved at KeyPoint Credit Union.
Thank you, Tony. And I'm really happy to be on this panel and to work with so many experienced bankers. KeyPoint started their cannabis banking program approximately 6 years ago. And there were two primary reasons to start the program. One, our board was very interested in serving and working with entrepreneurs because we're in Silicon Valley. Many of our board members are entrepreneurs and have worked for venture-backed companies and other emerging technology companies and industries. So they had a big interest in that industry. The other reason was we're a credit union, and one of our focuses as a credit union is to serve a underserved market. And we realized the large national banks in particular didn't really want to serve that market. So we felt as a credit union, as a community organization, there was an opportunity for us to serve that market and serve entrepreneurs. So the initiative really started at the board level. Once the board approved our business plan, we went out there and did what we call basically a soft launch, where we went out and looked for 50 clients to start onboarding, to test our systems and our compliance, and work with our auditors and some consultants that we have brought in, including Shield. And we really built a solid foundation to go from there. So once we had reached our in-house limit for our soft launch, we really took the next step and went to our phase 2 to launch our program nationally. And we focus on dispensaries, manufacturers, indoor growers. We have a lot of indoor growers because we're in major metropolitan areas and in the California and Silicon Valley area. We work with distributors. We've got a social equity program because as a credit union and a community organization, we also feel it's very important to work with that part of our community. One of the things that we really pride ourselves in as a credit union is also our community involvement. We get very involved in the different associations and cannabis groups, and there seems to be so many, especially in our area. But they really find value in partnering with community banks and other community organizations and credit unions because we really want to become their partner. We want to help them succeed and help them grow.
Well, Herman, thank you. We've never chatted about it, but I actually sat in on that board meeting. It was a fascinating discussion with the board as they grappled with whether they wanted to get into this line of business. You know, thinking about when KeyPoint entered the space, there were other financial institutions in the market serving the industry, but many of them had months or year-long wait list to receive services. Paul, you mentioned you were the first bank in Massachusetts. Ross, the first financial institution in Michigan. That's not the case any longer. The competitive landscape is quite different. Ross, talk a little bit about what the competitive landscape looks like and what kind of options that's provided for cannabis operators and how that's influenced what you do at the bank.
Yeah, definitely has influenced us, as would be the case any increase in competition, irrespective of the industry. Yeah, and we know there are a lot more banks in it now than when we first started. We know that not only from the data, but just anecdotally. I mean, we have a lot more conversations with people now, prospects, folks that are shopping, where before, as Paul said about Needham early on in Massachusetts, it was the only option. We were the only option in Michigan, and so we have to really be on our game. We certainly, even without the competition, wanted to be great service providers for our customers. But if we're not now, they have other options. And so in some ways it's really helped us stay sharp and stay on our game. And it's obviously good for the industry, for the cannabis industry as a whole, for there to be more competition. It's interesting though, while there are more banks that come into the space, there are still banks every month that decide they're going to exit the space. And so we're seeing a little bit of both. We've seen some folks get into the space and maybe had genuine interest, but just couldn't figure out how to make it a profitable department for themselves. So we're seeing a little bit of both.
Yeah, I think just like the cannabis operators themselves, as bankers, we're in a position to figure out how to get scale and efficiency when we offer services. And even in these high-touch, compliance-focused relationships, we have to get to a point of profitability and efficiency. As I mentioned in the intro to our webinar today, the industry itself is changing. These businesses are consolidating. They're oftentimes getting newer, upgraded management teams as the businesses evolve and mature over time. And sometimes the banking partner they picked initially might have been just the only option they had. And now as their business is changing and evolving, they may be considering looking for a new financial institution. And I'm curious, Paul, as an operator is thinking, maybe it's time to evaluate my banking relationship. What should they be considering? I mean, I think Ross hit on one of those items, which is the stick-to-itness of the financial institution that they may be joining. It's a real pain in the keister to change banks. And so what else should an operator be considering if right now in their business, they're thinking, I want to evaluate my banking relationship?
So I mean, that's a very broad question, but one of the things that would trigger a cannabis entity to evaluate their banking relationship is the services they deliver. So if you're dealing with an SSO, a vertical in-state, or a dispensary group that's in-state, and they migrate to another state or two other states, does your current bank have a national footprint? And we do, and we have had one for almost 3 years now, and can process any place in the continental US and do in 24 states. And so that's allowed us to expand existing relationships with mid-sized and large MSOs that are in multi-state. And so you have that benefit. But what a client should also look at is, do they offer the services we need? How long have they been in business? And this is not to, criticize a de novo bank jumping into the space, because I think all three of us on this panel would love to see more banks. Not that we want the competition, but there's room in the market for additional options for the cannabis industry. But there comes a risk with that, because to Ross's point earlier, in Massachusetts, we've had 2 or 3 banks jump in and jump out almost as quickly. We've had a very large regional bank jump in and 5 months later jumped back out. And that is even more disruptive to the industry, because like every other bank, if you have a mature portfolio, you lose 1 or 2 to these new entry FIs. And then when they exit, now they're left with, well, now where do I go? And so they come back. And so I think a client needs to evaluate the program and the size of the institution and possibly even the management, because what's happened, everyone's looking for deposits, margin, fee income. And to start this business de novo, you can't catch up on the compliance. You need to have the compliance in place day one. And that is incredibly expensive. And you need experts to do it. It's not earn while you learn compliance. Like if you don't know it cold, well, when the regulators show up, it's not going to be a great story. And so I think banks start to realize how expensive this business is to manage and then jump back out. And let's face it, you know, when you start de novo, if you get 3 new customers, 5 new customers, that's not going to cover the FTEs that you need to support the business, nor the systems that you need and the cost associated with those to run and manage the system. So I think clients need to, before they jump from one frying pan to another, need to make sure the one that they're going to is going to be around for a bit of time. And I know there are more competitors out there, and you're right, there's 240 of them. And some of them that are in there, you know, try to lowball in order to gain market share. We have that here in Massachusetts. We have it in other markets where we've talked to clients in New Jersey and New York and Connecticut. And the reality of the matter is this is an expensive business to run. And so fees need to be fair. They don't have to be gouging, but you need to charge fees in order to continue to evolve and provide those services that everybody needs and wants for their business.
Well, Paul, I think you make a good point that that the sort of first filter is does this potential new partner have the scope of services that are going to meet my needs today, but also as my business continues to grow and evolve. Changing banks takes time and energy, and so making sure you can continue to grow with that financial institution, and then again making sure that the partner you have is committed to serving this industry and has made the necessary investments to be long-standing, so that you're not surprised if the institution decides to get out. Herman, as you're working in California and now expanding your program to look beyond just California, as you're talking with prospective customers about moving to KeyPoint, what are those things that entice them to be open to that conversation, knowing today that in most markets, a cannabis operator has access to banking. It's not that they're unbanked. It's now you're having to convince them to move from an existing financial institution to your financial institution. What motivates a licensed operator to make that move?
That's a great question, Tony. And I think Ross and Paul covered some great points. But I think a lot of entrepreneurs really are motivated, as Paul talked about, pricing. But we try to really talk to them more about how we're going to really help them succeed and help them thrive. Because when you're out there buying a car, you're not going to buy the cheapest car, right? They're going to buy the safest car or the most reliable car or the car that you personally like. We try to sell that we have a dedicated cannabis banking team that really understand the network and the industry. Coming out of Silicon Valley Bank, where I worked at in private equity and venture banking, we realized the value of banking was really the network. We pride ourselves in really knowing and our relationships and using that relationship to help our other cannabis businesses nationwide. Cannabis businesses find a lot of value in that. We also try and provide some business consultation because we see hundreds of cannabis businesses. We know what different dispensaries go through. We know the challenges cultivators have, and we can share that knowledge with them or put them in touch with other operators, and they find that very helpful. We also find it somewhat easier to compete against some of the financial technology companies because when our cannabis banker, our member calls us, when our cannabis member calls us, we pick up the phone. When they send us an email, we'll reply. Our service level is to try and reply the same day, if not within minutes of receiving the email. Often when you're working with those financial technology companies, and they've got a great service, but they don't really have the staff to support the industry. So that's what we're seeing, and that's how we're able to win a lot of our new cannabis members.
That makes a lot of sense. That high touch, high service, almost private banking aspect of the cannabis banking industry. And I think your analogy to some of the things that you did in your prior life make a lot of sense. We see that strong network of licensed operators and referrals between those licensed operators and financial institutions because of that strong network. One of the things that we do on an annual basis is an operator survey to better understand why licensed operators would change financial institutions. And of course, fees often come up, but one of the strongest drivers that we see is access to credit. I think it's estimated there's something like $8.3 billion in loans out to the cannabis industry. The four of us know that most of those loans are not held by regulated financial institutions. They're held by private lenders. And sometimes those terms can be pretty difficult for licensed operators to swallow. And so they would love access to more traditional bank financing. Ross, maybe you can talk a little bit about what your bank's appetite is for lending today and how that's been evolving over the last few years, considering that we still have challenges like 280E that is sucking up a lot of cash flow in the industry.
Right. Yeah, credit's tough, as you've acknowledged, and all of us on this call understand. We do have loans in the cannabis industry, but we actually currently have a moratorium, and the reason being that there are just a number of issues out there creating uncertainty. You mentioned rescheduling and the positive impact that could have on 280E, but it appears now that rescheduling is going to continue to get kicked down the road. There's the Farm Bill that was supposed to be renewed in 2023. It continues to be kicked down the road. For those of us that also work in the hemp industry, that could, what happens with the new Farm Bill could have significant impacts on the hemp industry. And so there's some things out there that we want to try to get some more clarity on before we open the lending back up. And then the reality is we've over the last year used a lot of resources to underwrite loans that did not get done. And so it took the time of the customer and it took a lot of our resources. And we finally just decided that's not good for the customer and that's not a good use of our resources. And so we've put a pause on it. It's not a permanent stop, but it is a pause for the reasons noted. Now that said, this is, I'm sure, is the case for Herman and Paul. We never want to just tell somebody, "Hey, we can't help you. Good luck," and hand them their coat and show them the door. So we do have relationships with some non-bank lenders that we are happy to make referrals to. To your point, Tony, sometimes those rates and fees can be high, but we at least are able to help them make connections to lenders that we know are active in the space, because they call on us frequently asking for referrals.
Paul, thank you, Ross. That's super insightful, and I know there in Michigan, in particular, you've had a huge margin compression, which I'm sure also makes underwriting challenging in this space. I know, Paul, you have tremendous loan demand and often outstripping the appetite of the financial institution. But maybe you can share a little bit about your lending appetite at Needham and how you're approaching the market, given some of the challenges that continue to persist.
So we are still lending, but are lending to our existing customers. And, we started lending once we did the transfer over to Needham. A couple of things happened. We opened up the lending spigot again, and it quickly grew at a rapid pace, like far beyond what we had believed could be. And so, all fantastically good deals, but in today's world, especially after some of the banking issues we had a couple of years ago, regulators came in and wanted to see concentration limits, and where's a concentration limit? And we quickly, were starting to bump up against those limits, but not significantly. However, it gave us pause. Like, we were looking at what was happening in the industry, the consolidation, softness in certain markets. And so our strategy has evolved, and we are looking, to work with our existing customers where we have a track record. And we're looking at clients that, have a revenue stream. In this particular industry, de novos, we can't really do a de novo loan to the cannabis industry, because we need some kind of revenue, some track record, and we need some kind of tangible asset like real estate in order to make sure that the debt is secured.
Right. And but Paul, we're not as bankers, we're not angel investors in any industry. And we've just got a few minutes left for our conversation. Herman, I just want to touch base with you. How are you approaching lending at KeyPoint, or is that something that you've entered into yet?
That's a great question. KeyPoint's model is more like what DART is doing currently. We don't really lend business loans or commercial real estate loans to cannabis-related businesses at this point. The majority of the loans we looked at, they just don't qualify. There's too much going on with the business, with their taxation, and they seem to pay a lot more for ordinary services compared to other business, even a rent payment, right? So that really throws off valuations in commercial real estate. But what we have found, much like DART, what Ross does and Paul, is that we can provide value by providing them other introductions. Being in Silicon Valley and working with these entrepreneurs, we do know other investors, commercial real estate brokers, asset-based lenders, hard money lenders. But the reality is, when I talk to a cannabis business, my recommendation to them is to not take any debt. In Silicon Valley, most of the successful tech companies are bootstrapped, or after they're bootstrapped, they take some institutional money, venture capital funds. But being bootstrapped, trying to make it on your own, or working with friends and family to support you. I think in this case, with the cannabis industry still emerging, with the regulations and the taxation, that is going to be more better for them and more sustainable. Because if you take some debt and you're not working with a good debt partner, likely you're going to lose control of your business, or you might go into receivership. We see a number of businesses go into receivership. But what a banker can do, what we can do is help them when they get an offer from a debt provider or an investor, is to tell them what some of the best practices are and what to look out for.
I think Herman, that's a great way to segue. I was going to ask each of our panelists, as we have just 2 minutes left, to provide a great piece of advice to a licensed operator, something they should talk to their banker about. And I think your advice there to be cautious about debt and the terms on which they take on debt, especially when they take on debt from non-regulated financial providers, is extremely valuable advice, because you can lose control of your business. Ross and Paul, any parting thoughts from you or advice to licensed operators as they consider their relationship with their financial institution or a potential future financial institution? And Ross, I'll start with you.
Thank you, and thanks again for including me on the podcast, Tony. I would say two things in answer to the question about when to start looking for another bank. I think Paul is spot on. If you start to get the sense that the bank that you're with cannot grow and scale with you, then you probably need to start looking while you can, because if you wait too long, then you end up having to do it with a heightened sense of urgency and may not have time to do that. So if you get a sense they can't scale with you, you got to pay attention to that. What I would also say to people looking for their first bank is make sure you are with a cannabis-friendly bank and not just a cannabis-friendly banker. We see that frequently, where the business owner knows the local banker, has a good relationship. The local banker may even have some insights and understanding of the cannabis industry, but they're not working for a cannabis-friendly bank. And that local banker is eventually going to lose control of that relationship, and the business owner is going to have to look elsewhere.
Yeah, that senior management commitment, not just the individual banker commitment to this industry, is extremely important. That's terrific advice, Ross, and thank you for that. Paul, I'll let you give the final piece of advice as our senior cannabis banker here on the panel today.
Senior because I'm the oldest. Anyway,
just the gray hair there.
Yeah, exactly. But I think Ross's point is 100% spot on. You need to look beyond just the banker, and here the way we've developed the cannabis practice, it's truly, as even Herman said, it's a private banking model. We respond to the clients instantly, and you need to look at the bank that you're possibly going to move to. And for example, at Needham, our CEO and chairman, Joe Campanelli, loves the cannabis industry and goes on calls with us, knows the major players, attends events, and that speaks volume. And if a cannabis client ends up in the call center, they're not treated like a pariah, they're treated like a customer. And that is key, because customers end up in different departments within the institution and need to be treated like a customer. And that isn't always true. And our clients tell us that. And that's unfortunate. The other thing, we need to be able to offer all services to the clients and to the cannabis business clients, but also to their employees. So we do business banking and bank at work programs for all of the locals, but we even do it virtually. We just did one in Colorado and opened 16 accounts for employees virtually, because it's doable. And those are the things that if someone is going to leave their institution and that's a service that they're looking for, that's something that they need to inquire when they're interviewing the bank. And again, it's less about the fees, but more about the relationship you can build with your banker and what what that banker can do for your business and your employees, in my opinion.
Well, Paul, Ross, and Herman, thank you so much for your insights today. We greatly appreciate it. Jay, as I pass it back to you at Cultivated Media, a few quick takeaways I think that our panelists provided today. One is really, if you're looking to change financial institutions, make sure that financial institution is committed to the cannabis industry, not just at the local banker level, but all the way up to senior management. And consider the long-term financial needs of your organization and that the bank that you choose can scale with you. And while we know the industry wants access to credit, the underlying financial condition of the cannabis industry and the newness of some of these businesses makes lending still a little bit more challenging. It's not that these bankers don't desire to serve these businesses with credit facilities, but it will take time as the bank's risk appetite changes and the credit union's risk appetite changes, but also as the industry continues to mature. So with that, Jay, I will pass it back to you, and thank you all for your time today.
Tony, Paul, Ross, and Herman, thank you so much for your time today. I took a ton of notes. I don't know if you can see them here. A little bit of doodle, but mostly notes. For your time today, I want to thank Shield Compliance for their support of Cultivated and for making this webinar possible. As further information for each of you, I've linked two downloadables. The first is the Cannabis Banking Playbook, and the second is the Lending Guide, both from Shield Compliance. I also put a link to Shield Compliance for those interested in learning more, as well as links to all the banks and the people represented on the panel today. As always, please follow Cultivated right here on LinkedIn. And if you can find our YouTube channel, it's also chock full of information. And we'd love if you got our newsletter in inbox every single morning at 7 a.m. Eastern. You can find it, coincidentally, at cultivated.news. Again, thank you all for joining us here today, and we'll see you at the next webinar, which is actually 1 week from right now, on Thursday next week, which is called Expert Insight on New York's Cannabis Licensing Deals. Super important. Link for that webinar is in the chat as well. Have a good and safe afternoon, everybody. We'll see you next week.